Good morning, traders. Today is Monday, March 29th. My name is Charles, and this is the Pirate Traders live stream. All right, so let's take a second to just remind ourselves what happened on Thursday and Friday. Okay, the market was going through a bunch of turbulent times. On Thursday, we made a good low on a bounce off of a moving average, daily moving average. Okay, the market pushed much higher, had a rotational overnight. Then the market opened the next day. We had a rotational day where the market built balance and built volume right here. And then we had a spike, an enormous, insane, we couldn't believe what we were watching spike that happened at the very end in the last sort of 30 minutes of the day, which repaired like half a dozen weak references that were lingering above. Okay, so the overnight is balanced. Oh, excuse me, the overnight is actually net short. So they started up here and they're down here. So it's 100% net short. So that increases the odds that there might be a counter auction going up once the market opens here in 1 minute. The overnight stayed within the spike. It explored a little bit below the spike, but it stayed within yesterday's range. So that just increases the odds of rotation. And I would just remind everybody that we are opening this morning inside of yesterday's range. We are also inside of the spike. So being inside of yesterday's range increases the odds that there will be chop early in the morning, that the market will need to grind up and down and figure itself out. The fact that we are in the base of the spike, or that we are inside the spike itself, that's neutral. So that doesn't mean the price is going to go down. It doesn't mean the price is going to go up. It just means it's neither bad nor good. But in this case, in my opinion, that is bullish news. Okay. So the levels to watch today as the market starts to grind higher and lower is obviously the first is the base of the spike. If the market sells down to this 39, 34, 50-ish level, okay, look for support somewhere around there. If you find support, go long for continuation higher. If the market fails, sorry, I just got to wait for the data to load here so I can have specific references. If the base of the spike fails, if the market sells down to here and then it doesn't find support, it keeps going, it's a good short traditionally once you get back in the spike to go short with it for continuation to the opposite end of balance. But and again, once the data loads here, I can show you. On Friday, we spent so much time. We spent the whole day grinding around in these levels right here. So I would think even if this, 39, 34 level breaks, we'll find support shortly underneath it, somewhere around the POC, somewhere in the 20s, 39, 20s area. Okay. So I wouldn't go short if it broke here. I would wait for support here and then go long on the way up. But if you're a shorter term trader, if you're looking for little grabs here and there, that's a great trade once the base of the spike breaks. Okay, so once again to the downside, we'd be watching the market sell off, find support, and then either work its way back up or break and then probably come down to test these lower levels. To the upside, if the market continues to trade higher, it's again because of the amount of volatility that we had, this crazy, like the amount of volatility that we had at the last 30 minutes, it makes the highs a little more tricky to play. Because essentially the way I would normally play it is I would wait for the market to push above yesterday's high, come back down, and then find support to make sure it's not a look above and fail. But then, of course, I'm giving up a lot of profits between here and there. So it's up to you how you play things. If instinctually you feel like the market's going to work its way up, you can jump into that trade. But for me, I'm stuck in sitting on my hands as long as the market is just grinding up and down inside this spike. Okay, there's no new information until we get to the C period. If we get the cessation of one time framing in the C period, then we know it's likely we're just going to rotate today like they did in the overnight. But until then, I either need to get above yesterday's high or come back down and test yesterday's low. I'm sorry, the base of the spike here at 39, 34, 50. Okay, so those are the two levels I'm watching, and I won't be jumping into a trade till we get to one of those. All right, guys, we are getting that counter auction to the overnight inventory being net short. Can they push their way all the way up to the high of yesterday? I don't think so. I think we're going to get chop, but let's see. The taper on the low is actually acceptable to me. 3,000, 1,300. It doesn't look pretty, but that actually works as a good low. So keeping that in mind. Market internals opened bearish, but immediately are pointing upwards. So we'll just let those work themselves out for the first few minutes today. Good morning to Philip. Good to see you. Hi. Good morning. Dr. Vijay, good to see you as well. Fausto, thank you for the thumbs up, my friend. Phoenix, good to see you. Stevesy, good morning. Asif, good to see you as well. FRM, man, the whole crew is here. Angelo, good to see you. Is it Kai? Correct me if I'm saying that wrong. Good morning, Kai. Welcome. Daniel, good to see you. Welcome. And Donkey in the house. Good morning. RJ, good morning to you as well. Am Gossel, good to see you. I think that's probably the first time I ever got a name right. Armando, good morning to you as well. Yeah, you want to take a look at the NQ? Let's do it. All right, so NQ, just like the ES, had a spike higher on Friday. The overnight inventory, same as with the ES, rotated within there and was also net short. However, it's a little stronger than the ES this morning, as it looks like it's already testing its overnight high. So if you don't get any resistance there, you test the high of yesterday, right at about 12,990. Okay. And if it gets above there, you look for it to come back down and find support somewhere in this area. And if it does, you go along with it because that's a breakout from yesterday's range. So you've got acceptance in the balance yesterday, a push higher, acceptance in the overnight. So if we can get above that high, we get the next push higher. Okay. Also, nice clean overlapping value areas there in the NQ. So this to me is a little more sustainable of a move higher because you can clearly see value overlapping. Whereas in the ES, we've got like straight up breakouts from day to day. You know, this one's way higher than this one, so there's excess in here. We also left a poor low. And then, you know, same thing here. So excess, excess. Excess leads to balance. So we got to keep an eye on that as well. Rocky, no worries, bro. You didn't miss much. We're getting a counter auction to the overnight inventory being net short. And I thought we'd get more grind than this, but it doesn't look like it's happening. So I'm watching the high to see what happens when we get there. Okay, paper thin volume just above the halfback here at 39.54.50. That will need to come back and backfill. Yeah, Rocky, you can always jump back and check it out. It's funny though how even just like 10 minutes later it becomes less relevant because it's all guesses about what the market will do. Um, my guess was a push higher as a counter auction to the overnight and then grind. So let's see if I'm right. Okay, again, we got these contracts here at, or these levels here at 39.55 ish that are only have 300 and 400 contracts. Those need to backfill. Can the market create some support around here? Morning Slade, welcome. Okay, so the market is grinding its way down here. If it works past the low, the first support is going to be this little node of volume right here where the overnight POC is at around 39.43-ish. So if we don't find support there, the next stop would be the base of the spike. If the market sells down to the base of the spike and finds support, that to me is a very good long for a rotation back up. Okay. Good morning, Jeff. Good to see you. So, yep, currently that prominent POC from overnight acting as support. Okay, but only 16 contracts at the low. That will likely need to be revisited. The NQ testing their 20 moving average on the 15-minute candles. That often becomes support. The internals are sort of bearish to neutral, I would say. Okay. We are now one time framing lower. This is not acting as support, so the next target is the base of the spike here at 39, 34.50. Once again, this is a really important level, right? This is where on Friday, this is where the break really begins. I know it started a little lower, a few ticks lower, but it doesn't really count until you break out above. We had this like crazy poor high we were developing. And so the breakout above that was what brought in the change here, all these single prints. So that's sort of the base right there where we expect to find support. If the market sells through that, it is, normally breaking the base of a spike is like a very negative thing where you would expect it to rotate to the opposite end of the balance. But as I mentioned before, I wouldn't go short there. I would go short if we broke through this for rotation down to the poor low. Because I think even if we broke the base of the spike, we'd find support in here. The only negative thing to keep in mind is the amount of excess below us. Okay. We have this spike with single prints that have not been revisited. We have a poor low there and a poor low there. So that's a lot of weakness below us that we don't need to worry about it right now. Right now, the market is in balance. It's rotating inside of a spike. We don't need to worry about any of that, but we just want to keep it in mind. It is down there. Also, it's worth noting the one-time framing down here in the B period is an indication that likely today will either be trending down or rotational sideways. Not necessarily a drive much higher. So my guess is rotation. My guess is, we've had it over and over again. We get this excess. Let me just zoom back here. This is just what these markets have been doing. So let me just zoom back. It's like you rotate, you get excess to the downside. The overnight pulls us back up. We rotate all day, excess to the downside at the end of the day. Then the next day, we test lower, rotate a little bit, push higher, rotate, push higher, rotate. So rotation is probably, it's just what the market's been doing lately. Yeah, I recognize that if you are trying to trade this chop here, it's probably a nightmare. It's very difficult. But like I said, the next target to the downside is the base of the spike. So just assume that any chop or grind that we're experiencing is heading in that direction. We wait to find support down here. That's why I said this morning, I don't take any trades until we either break this level or this level. I let the market do its thing. It seems insane to have missed this much volatility. But just again, I'm always trying to keep in mind my mental capital. Right now, I'm bored. I'm not even frustrated. I'm not feeling anything. I'm just waiting. So when the market gets down to this spike, the base of this spike, if it finds the support, I can calmly enter the trade and let it grind its way all the way back up, because I haven't been sitting here trying to jump in and out of trades, getting all emotional. So yep, once again, what happens when we get to the base of the spike here? Do we find support and then it starts to rotate back up, or does it break? If it breaks, it increases the odds that we go down to visit the poor low. We're going to print the C period in 2 minutes. So we'll see, does the C period continue to one time frame lower, or is it able to rotate back up and get a few ticks above the B period high, increasing the odds that we go rotational today. And our day market looks a lot like this overnight market. We just have to keep watching and waiting. That's a great point, Am. I'm glad you brought it up. I only trade the ES, and so this is all I look at when the ES is doing something like this. I just sit by and wait. But if you're a trader who trades multiple markets, when you open inside of the previous day's range where the overnight market just rotated inside the previous day's range, I mean, you could almost use those days to be like, okay, today I look at commodities, I look at Forex, I look at crypto. Today's a day to sit by. Okay, so as we print the C period here, we are testing this spike. Again, it doesn't have to stop right at it. Just somewhere in this area, we'd like to find support. We need to get one more tick lower on the C period here, but we also need to fill these single prints. So I would say if we get one more tick to the downside, we increase the odds we rotate back up to fill those single prints. Yeah, Jeff, I would agree with that assessment and that trade, as long as you're keeping an eye on this support that we're finding here at the base of the spike. Like you said, I wouldn't certainly wouldn't be going short anywhere here. The break of this is a good short for a rotation down to the poor low, but then again, I'd keep an eye on this little pocket of volume here from Friday, where you'll likely find support right there. But what my instincts are telling me is we're going to rotate back up, fill these single prints, and then make our way above the B period high by 2 ticks, which will make the market more likely to go rotational. And then I think we're just going to do the dance like the overnight did, all night of just, or all day of just bouncing up and down. It all really does, we have to get back down here and get 2 ticks of excess below the C period low. It all kind of matters what happens at this spike. So this wasn't fair. They tricked us. I did go long. And if we get back up to the POC, I'll go ahead and take profits there. But I have more orders set to go long with 2 ticks of excess. So I'm a little disappointed. All right, guys. Well, for a little update on where I'm at, like I said, I jumped into one long contract at the base of the spike and then took profits at the POC when it was like down here. But now with the one time framing continuing and the weak market internals, I've pulled my other limit orders that I had down here. And what I would do is I would wait until we get some excess and then find support, and then I would grab it on the rotation back up. But we are technically trending down right now, and we have bearish internals. So the fact that we're butting right up against this super important support, once again, when you break a spike, you often rotate to the opposite end. So all of those things lining up, I don't want to jump in any longs here, and I want to be flat to position myself for shorts if I feel like the market can't find support somewhere between the base of the spike and the overnight low. Also, we're pulling the value area down, and we've almost pulled it down to being overlapping from yesterday. So that's not bearish, that's neutral to bullish, but it's still worth noting that we are pulling value lower whilst one time framing. That's the way to do it, Jeff. Enjoy. You may get lucky. If you stayed in it, we might get a rotation down to the POC or even the low of yesterday. Making that good money. Okay, Fausto, and where is your stop? You're long 50 and you're long 40. So where are you wrong? Where do you realize that the trade's not going to go your way and exit the position? $39.18. Okay. Yeah, I mean that's a good stop if you can handle accepting all that loss. Then that is a good stop because it's the market will likely find support by the time it gets to like 19 with this little node of volume. So I do like that as a good stop right there. But it's just you have to know you might have to eat that loss. Oh boy. Yeah, the Russell is selling off like a motherfucker. Okay, well, that adds to my fear that the market is going to continue to sell off today and that this is a downtrend. Dow's about the same as the ES, a little bit weaker. NQ is stronger, but man, the Russell is selling off. Sometimes a Russell can act as a leading indicator for the ES. Okay, so we got a good low there in terms of excess. Repaired the poor low. Okay, Jeff, that might make sense. React into the 10 years. Okay, the base of the spike currently acting as support. Don't love the 45 contracts at the low, though. Okay, well, now this support is starting to break here at the base of the spike, increasing the odds of further rotation to the downside towards yesterday's poor low. You got support potentially at the overnight low, and then again in this node of volume from Friday. Otherwise, we are one time framing lower. We have bearish internals. We broke the 20 moving average, and it has worked as resistance in both indices. So I think further downside continuation is likely. So Slade is looking at 39.13. Okay. Which is basically the opening price of Friday, around that area. To me, it just seems like a when what should happens kind of scenario. If the market sold its way all the way down here, why not just come repair the poor low? So it seems more likely to me you'd find support up here in the 19 to 22-ish, 23-ish area, and then rotate back up. If you're gonna sell off beyond that, I think the poor low is the next target. But let's wait and see. Yeah, Jeff, if all I was looking at was the market profile, I'd agree with you. The only thing is, looking at the internals and the Russell right now, I do feel like there might be stronger selling and that we just haven't got there yet. You know what I mean? We're just in such a nice area of support here. But I wonder what happens when these levels break. When we break the overnight low, and especially if we break this little node of volume from yesterday, I do think that brings in a lot of sellers. Um, but you could be absolutely right. I mean, we could be finding support right now. Gotta wait and see. It is very orderly. That is one thing I will say about it, is that there's nothing emotional happening here. This is just the market slowly one time framing down, looking for buyers to step in, and then it'll work its way back up. So yeah, it is very orderly. Yeah, super slow tempo. Super, super slow. Word, Jeff. I'm just trying to pick a fight with you because I want to get the chat going, get a debate going on both sides, really get this thing lively. I'm just kidding. Yeah, totally, bro. Obviously, I can't predict the future. I have no idea what's going to happen. But, Fausto, I think this is one of those opportunities where you need to learn to exit a trade when you're not right. You know what I mean? Um, Currently, you're fighting one time framing, you're fighting the internals, and you're adding to a losing trade. So you're piling on. And then on top of all of that, you've got this super loose stop loss, which, like, for a pro trader, that where you put the stop is where they would put the stop. That's where I would put the stop. But right now, at your skill level, you should be practicing getting out of a trade as soon as you're wrong. So this might be one of those learning opportunities of, like, you got to trust the market generated information, because you really wish for things. You make a plan, you get into a trade, and then you look for things that will, like, you were like, oh, the NQ didn't make a new low. That didn't mean anything to me. Who cares? It's stronger than the ES today, but all the other indices are super weak. So it's like you're ignoring the Russell and the Dow and just looking at the NASDAQ, because it's the one giving you the thing you want. You want this trend down to stop and to start rotating up. And so you're looking for a thing. You're looking for market generated information to make you right, as opposed to just being open to whatever the market generated information is. I, like you, think the market wants to rotate up today, but I'm not going to go long against one time framing down. I'm not going to go long against really bearish internals, against the other indices going down. Like, as much as I want the market to go up, and I think it will, the market generated information is telling me the market wants to go down. So either I don't take any trades, or I trade in that direction. I trade with the flow of the market. And I think this is one of those things, it keeps happening with you, where you get into a trade and then you sit there in the red forever, just letting it eat you alive. And I swear to you, bro, it's fucking up your emotions, man. Like, trading's really easy. You make it really, really hard on yourself. So I would just look at this again as another learning opportunity of, like, ask yourself the question right now: why did I get into this trade? What was the story that got me long at, what was your first entry, 50? Like, we were in the A period, market was rotating up and down. You know, it was like, what made you jump into the long there? What made you add to it down here when we had started one time framing lower? Like, ask yourself those questions, and then ask yourself, why didn't you change your mind when the C period continued to one time frame lower, when the D period continued to one? Like, at what point do you say to yourself, whatever reason I got into the trade is no longer right? Now, I think if your stop is that low, you might be fine, right? The market might rotate down, find support right in here, and then pull right back up, and you'll end profitable at the end of the day. But the problem with that is you're like fucking up your brain. You're fucking up your subconscious in understanding how to be a good trader, because you took a bad trade and just gave it so much room to go against you that you got lucky and it came back, as opposed to creating a system for trading where you get out when you're wrong and then get back in, right? If you wanted to go long against this market, you could have exited, 2 ticks below 40. You could have exited right then and there and then re-entered down here. So you got to learn to just always know why you're getting in a trade. And then if you're wrong, get out. Instantly get out. Give up on your idea. Form a new idea 5 minutes later, but get out of that trade if it's not going for you. But, I mean, it could be totally wrong. Like, I started this little speech out. I said, I don't know the future. We could find support here at the spike. And that, third contract you just added could bring you lots of money. But to me, if I was trying to trade every day for the rest of my life, I'd be really worried about why I'm fighting one time framing and adding to a trade that I'm losing on. Anyway, my advice. Yeah, also, if I disagree on with if I was still holding these trades, I think he got lucky here. I don't think that this was a strategy. I think he entered too early, added to it too early, and he just got lucky and the market rotated up for him. But when we were down here at these levels when he added to it, even though, yeah, the market was spending time grinding around there, all it would take is just a few more ticks to bring in the sellers. That was a risky entry when you're already in the red. It's a great entry if it's your first trade and you got, your stop right there and boom, beautiful trade. But when you're already in the red and you have to get all the way up above 50 to get into the profits, that wasn't a good trade. And so the question is, at what point does he learn to get out of trades that aren't good? That being said, we're about to push up and get 2 ticks above the C period high. What does that mean? That's the cessation of one time framing. Early cessation of one time framing increases the odds of rotation, right? So how do we play rotational days? Well, we sell above value, right? So the question then becomes, we could have a big range because the range was so huge of this M period. But to me, once we got up to where his entries were, up to 50, that's where I'm looking to go short for rotation back down to the POC, not necessarily continuation higher. So tricky. We didn't quite get the cessation, but we will here in the E period. So yeah, it's just a matter of I'm trying to help him learn to work his strategy better, because I feel like he enters trades and then just looks for reasons to stay in them as opposed to just exiting and then finding a better trade. All right, well, the market is still trending lower, still one time framing. Market internals starting to look like they want to trend up, though. All right, that's the cessation of one time framing here in the E period. Increasing the odds, the market will now go rotational. So once again, I'll be looking to short above value, taking profits at the POC, and go long below value, taking profits at the POC. I'm not going to jump into the short just yet because of the amount of volatility here and the amount of single prints. The market might rotate all the way back up towards these highs first before it comes back down. But I know how to trade the rest of the day. Reversion to the mean. Yep, that's a good observation, Ryan. This is a B shaped profile, which is an indication of long liquidation, not necessarily new money selling. Just the people who pushed us all the way up here, they're kind of lost their hopes of the market pushing higher today, and they slowly were getting out of their trades. That's why it was so grindy. Yeah, Fuso, I'm not fighting you on your premise, on your idea to get into the trade. I'm fighting you on the way you manage it once you're in the trade. That's the difference. Is like anyway, I'm not going to keep lecturing you. If you're making money, keep doing what you're doing. All right, John, I can save you the fear of unpredictability. The market is rotational. Look for it to get above value and then rotate back down. Look for it to get below value and then rotate back up. Rest of the day should be easy. Yes, at some point it'll break out of that balance, but until then, just trust that the market will rotate. Yeah, he might be talking about a tick on my charts, which is actually because I have them in 2 tick increments. So on my chart, each tick is like 250. Yeah, A period has single prints, D period has single prints. Single prints above and below. Market is rotational. We're above value. Internals starting to look like they want to recover. Thanks, Algo. Have a great day. All right. Well, what am I looking at here? Looks like rotation. Mixed internals. Got above the value area, hitting resistance, increasing the odds of a rotation back down to the POC. My guess is a grind higher. That's what I'm starting to feel for today. But still going to trade it rotationally. Okay, we just pulled the value area higher, right? And made a clear break from yesterday's value. So now value is higher, which is slightly bullish. Okay, there's the rotation back down to the POC. So now I'm waiting for the market to either rotate below value or above, and then I'll be looking for a trade to rotate back to the POC. Also, just worth noting real quick where the POC is located. It's exactly the same level as the overnight market. No tradable information there. It's just one of those things. What did the overnight market do? It rotated up and down over this level. What's the regular trading hours market doing? Rotating up and down over this level. We are still inside the overnight range, increasing the odds of further rotation. Exactly, news blip. Seeing the comment above you from Zach is like what woke me up. Like, oh shit, I got to do something. Um, okay. So, yeah, what made me realize the market was going rotational was the cessation of one time framing here in the E period. Okay. So for the first part of the day, the B period high stayed below the A period high, the C period high below the B, and the D below the C. So at that point, the market was one time framing lower. It was trending down, right? So then we found support right at the base of the spike, which is where I expected to find support. And then we came back up and got 2 ticks above the D period high. So that was the cessation of one time framing. So that's what told me the market is going to go rotational. Now, it's not a guarantee. It's just a statistical probability that it's more likely to. But it could have come down here, found support, and then trended higher the rest of the day. It just is more statistically likely if you get the early cessation that the market will just rotate. But yes, there were other factors that were building up in my mind that even as we were selling off, I was assuming a rotational day. And that was the fact that we opened up inside the spike and that the overnight range stayed rotational inside of yesterday's range. So this tells me the market needed to balance off all this excess we created at the end of Friday. This is telling me that we're just continuing to balance that excess. That's why we've got the POC. That's just like a perfect line across. We're just continuing what the overnight started. It was a good observation somebody made earlier today in the D period that it was a B shape. It's kind of lost that. It's becoming a regular bell-shaped curve at this point. You know, the market will grind higher, put in some volume up here, then rotate back down, so on and so forth. But earlier in the day, it was a B shape, and that was a good indication that this wasn't new money selling. It was just liquidation of old longs, right? It was people who got too emotional, too long up in here, and suddenly they got disappointed this morning, and so they slowly were exiting their positions, and new buyers were slowly stepping in to buy those up. And I do mean slowly. Correct. And like another indication of that in terms of no like new money selling was the fact that we got below the spike and went nowhere, right? The first time we came down, we just touched it. Second time we got 2 ticks. Then we only got 3 ticks of excess below that and never even tested the overnight low. So that's just a sign that there were no new sellers jumping in at these levels. There is a trend also kind of forming here in the lows. Not exactly all higher lows, but pretty much higher lows here in the candlesticks. So that to me makes it feel like the market wants to grind its way higher. But man, it wants to grind very slow. Design knob, this is the one time where your advice is wrong because it has to go in both orders. Sometimes you have to sell first and then buy low to short when you're above value. So it's actually buy low, sell high, buy low. Okay, so yeah, the Nasdaq is forming that B. All right, again, an indication that it's not new money selling; it's just old liquidation of the longs created in the excess yesterday. Not quite as strong as the ES, but it is still trending somewhat in a direction towards grinding higher. You may want to take a quick screenshot so you can see where the value area high and low is, just to track that throughout the day. Or you could just keep popping back in and ask me to show it to you again. Flop said tip. Sounds like a sex thing. Flop said tip. You know, flop said tip. Well, the short is anywhere above value on a rotational day, unless you're looking for a really high probability short. But here's the thing, right? If the market works its way all the way up to yesterday's high, I don't want to go short with that there because it could just push right through and then bring in, breakout, long traders, and the market just takes off like a rocket ship. So I'd want to go short like here, like literally where we are right now with like a stop above the high of the day or at the high of the day or 2 ticks above the high of the day with a stop above the overnight. Try to catch those rotations back down, or if the market worked its way all the way up to yesterday's high and then met resistance, let it start selling off and then catch it on the way down. I wouldn't put in like limit orders to just have them sitting there, because you could, if you get above yesterday's high, you could bring in new buyers. The all-time high is right there. So that's the way I would look at it. $39.63 is the gap. What gap? Yeah, I don't see that as a gap. You're talking about this here, this like green arrow? That's a gap that was created in the overnight trade, repaired in the overnight trade. So that doesn't mean anything to me. What is weird is 180 contracts traded at all three of these levels. That's really weird. Look. Oh, no. I have seen that before, but it's just rare. Shri, did you understand it, or do you want me to explain it again? Or are you just testing everybody else? Okay. So the idea is that the price of a thing is just a trick to get you to buy it, right? So when they made, I don't remember what the different numbers were, but like one of the iPhones was like $400, and then the next one that came out was like $1,000. Now I can assure you that the next iPhone didn't cost $600 more to produce or whatever, right? It wasn't actually really worth $1,000. It was maybe more valuable or more expensive to make than the $400 one, but it wasn't that much more expensive. So why did Apple do that? Why did they suddenly shift their prices from 400 to 1,000? Because even though they sold less iPhones when the higher price iPhones came out, eventually, right, everybody's got to buy a new phone. So sooner or later, you got to suck it up and pay the $1,000 for the new, more expensive phone. And so the more time that goes by where people get used to paying $1,000 for a cell phone, it becomes accepted. The market, being people who buy cell phones, the market accepts these higher prices, right? It accepts paying $1,000 a phone. And then now Apple can charge $1,000 a phone and they get just as many sales, just as much volume at $1,000 as they used to get at $400. Okay. So time can also, verify that a thing is worth the new price that it's being charged. So that's why we focus on, with Jim Dalton's trading style, we focus on the time POC instead of the volume POC. Because in the case of the iPhones, right, if we watched the new iPhone come out and it had way less volume at $1,000, we might say as traders, the iPhone is going to fail and we short it, right? But it spent enough time at $1,000 that the volume then shifted from paying $400 to a phone to paying $1,000 for a phone. So we as traders would have been fucked because we're short the iPhone and it's staying up at $1,000. It's not going down. So time is really, really important to sort of regulate the market. The more time you spend at a level, the more acceptance that you have. Did that help at all, or should I take another stab at it? Pavel, welcome. Happy to have you. Dale, yeah, there's no specific thing that time is more important than volume. They're both important. You have to look at them both. That's why we look at the market profile, because it allows us to look at time, right, which is the TPOs going across, so we can see how much time the market spent at this level, and volume. That's why we have the volume candlesticks right here on the per price level. so that we can always look at time and volume simultaneously. And that's what makes it more potent. This POC is very potent to me as support if the market pulls back down, because we spent a bunch of time here and look at all this volume we built here. Same thing in the overnight, right? So it's the combination of the two. We ignore the price, but we pay very close attention to the volume and the time spent at different price levels. As far as targets to the upside, I do think we'll get a rotation back down because it's a rotational day. So let's see what happens when we get to the high of the A period. We get 2 ticks above that. I would look for the rotation down. If it continues up, what happens when we get 2 ticks above the overnight, and so on and so forth. It's just eventually it's got to end its two-way auction process and start its rotation down. Now that we're starting to see a trend in higher lows in the ticks, it would be that one random tick. So it'll keep building higher lows, and then you'll get that one random tick that breaks through. That'll start the rotation down. But right now it's pushing. Yeah, John is what, and I don't want to get overly, like, I know his trading style that well, just from the random things he's mentioned here and there, he's what's called the laggard buyer. So I've actually got a thing for this. Hold on, let me pull it up. So Malcolm Gladwell wrote a book on this where he basically explained the adoption curve, right? Like we can go back to the example of iPhones. When a new iPhone comes out, there's some people that gotta have it like before it's even released to the public. They gotta have it as soon as it's available, and they'll do anything to get it. They'll pay higher prices. They'll call in favors with friends. They'll do anything to get the iPhone as soon as possible. Then you got your people that as soon as it's available to the public, they gotta have it. They can't help but have it. Then you got a big group of people that come in. Let me pull this up while I'm talking about this. Okay, so we've got excess above the A period high. Do we find resistance here and rotate down, or do we go up and test the overnight high? Okay. So this is the thing right here. Fuck, I gotta like completely block the profile. Let me just do this for a minute. Okay. Okay, so basically you've got innovators, early adopters, early majority, late majority, and laggards, right? So when the new iPhone comes out, there's those innovators that they gotta have it. They got to have it before anybody else. They got to write blogs about it. They got to tell all their friends how cool it is. And then you got the early adopters. That's when the phone first comes out. They're going to be the first in line to buy it. They're the ones who will wait at the Apple store and get it as soon as they can. Then you've got the early majority. This is most people, right? They're going to buy the new iPhone the year it comes out, but they don't need to buy it right away. They'll wait for it to come out. They'll hear some reviews. They'll take their time, but they do want to get the new iPhone every year. So they're going to get it at some point this year. Then you got the late majority. These are the people that are like, they'll buy last year's iPhone, right? They're not going to buy the new bright shiny one that just came out. They'll buy last year's. And then you got the laggards, who are the ones that like, they won't buy the iPhone until they can't get a fucking Motorola anymore, right? Like they're the ones who will hold out as long as humanly possible. They're the last ones to the party. And so obviously they're buying like the oldest, cheapest iPhones where they're getting less bang for their buck. Okay. So this is something called the adoption curve. It happens in everything in life. Okay. Everything follows an adoption curve. It's not just buying and selling things. I mean, like anything, learning a new skill, making a friend, developing a romantic relationship. Like everything in life fits this model of like there are innovators who are the first ones in there, and there are laggards who are the very last ones who they need so much certainty. They need to see the whole world accept the thing first, then they're willing to accept it. So what happens to John is he fits into this laggard category as a trader. Now, John, don't get upset. Most people are laggards when they first start trading. So it's totally normal, nothing to feel bad about. But they basically, so you get a new trend that starts. The innovators are the ones who are buying the knife down here, right? They're the ones buying this wonky candlestick where the whole trend looks like it's going lower. And, this will be a scary fucking time. I am not an innovator. I am terrible at trying to be an innovator. I'm terrible at trying to buy the actual low. So what I try to do as a trader is always be either an early adopter or early majority. So the trend down breaks and it starts to trend higher. I want to wait for it to give me that signal that there's a change. And then I start looking for the pullback to enter, right? Then I get another push higher. I look for the next pullback to enter, right? So then I just sit in my trade and monitor for continuation as it moves higher, right? So then I'm monitoring as it gets higher. Oh no, the candlesticks are changing. We're getting more overlapping. And then I recognize, this is the late majority stepping in, right? The candlesticks aren't as bullish anymore. We're getting a lot more overlapping. So then I'm looking to exit into the laggards, right? These people who are buying these levels up here, they watched this whole move happen all day long. They just watched the market go higher, and they're like, man, I want to buy, but I'm not getting a dip. Where's the dip? And they're just all day building up frustration, and then they're buying up here, right? So on a day like today, let's say this was a rotational day. This would be more like a trending day that, ends here. But let's say this was a rotational day. Where is the POC? Right here in the middle. Where's most of the volume? Right here in the middle. Just like this, right? So that's why I know the people who are buying way above value, they're the laggard buyers. They're just people that are late to the party. They want to make money. They've watched us make all this money on the rotation up through value, and now they want their turn. But eventually they run out. And as soon as they do, because they're weak hands traders, right? They were so scared to get into the trade all day. As soon as it starts to go against them, what do? Exit their positions and you get a rotation down. So this is another concept. This is what, in my opinion, John is struggling with right now, is that he waits too long to get into a trade. He wants absolute confirmation. And so he ends up buying the top a lot. But that's just something you learn over time to not do that anymore. That's just the process of learning to be a trader. But yeah, so for me, the goal is to always enter the trade as an early adopter or early majority, and then monitor for continuation to sell to the laggards. No, you don't necessarily see it in the numbers, other than it just the volume getting thinner and thinner. But it doesn't. You don't know specifically. It's more the pattern of the way the market is moving. It's something you'll hear me mention it, like when we have days where the market is trending higher all day. You'll hear me start to say, I don't know. This feels like this is the laggard buyers coming in here at the end of the day. They're pushing this too high. They're getting too far above value. Even right now, that could be what's happening. It's too early to say. But right? These people don't understand that the market is just rotating because they can't see that that's what the overnight did. So they're trying to buy it up here, expecting the breakout higher. They might actually get it today, but you can see how the volume's starting to get thinner and thinner as we get higher and higher. Right? That just means we're running out of people. Okay, so the overnight didn't hold, so now we're targeting the high of yesterday. What are we starting to see? Single prints, right? Got a single print left over in the G period and all these single prints in the H. Okay, only got one tick above yesterday's high. That makes this a poor high. We often get a push away from a poor high first, then we come back to repair it. Okay, got good excess on the high now. Not great taper with only 35 contracts, but good excess. We have some thin volume below and a single print that needs to be refilled. We're also way above value. Okay, we got the trend happening here in the ticks. So we'll know that that trend comes to an end when we get the one harsh tick down, or probability-wise. Okay, so this is currently a look above and fail. We got the single prints below, lots of thin volume. Not quite had that break yet in the ticks though. So there are still buyers stepping in here. Yeah, Phoenix, I would say they're looking at that all-time high. I just don't think it's going to be a straight shot. I think it'll be a grind up there. But yeah, I do think that's what they're looking at. So just to backtrack to the original price advertises, time regulates conversation. So price pushed higher. That's the advertisement. Hey guys, we want to do business up here, right? Did we get volume to come in and verify that we want to do business up here? No, we did not, right? We still have paper thin volume all up in here. So now time is trying to regulate the market. Time is trying to say, okay, well, we'll just stay up here and we'll just keep bouncing around in these levels whilst we build up volume. So the time is regulating the price to stay higher. Once we see the volume, once we start seeing these pink volume nodes popping up here, then that's the market. That's how we measure the success of the move, right? So time is trying to get us to push higher, but volume hasn't verified it yet. Chris M, no, you're late to the party. That move was the correct short if we failed below the overnight low. I mean, I'm sorry, yesterday's high. I don't know why they just said overnight low. Um, Brain just had a crazy reaction. Yeah, so that was the perfect short here, right? Because you only had to risk 2 ticks, and then you got your pullback down into yesterday's range. But if we now push back above yesterday's range, which is what we'd have to do to get 2 ticks above this 70 level that you mentioned, then that could bring in new buyers, right? So we were looking, the market was trying to fill stops here, and they didn't get anything for it. So now it's pulled back down, and we're spending time here trying to bring in volume, but we're not very successful, are we? There's half as many contracts trading up here as there was down here. So that increases the odds. The market's got to pull back until it can bring in those buyers. But once it does, if it gets above yesterday's range, that could be the breakout. It's a lot. It's confusing. I get it. It just takes time. Lewis, congratulations. That's fucking dope. I mean, if I was going to place a trade at this exact moment, it would be short. That's if I had to get into a trade right now, it would be short, because we tried to look above yesterday's range, it pulled right back in, and we're not bringing in tons of volume here. So right now, the highest probability is a rotation back down to value. The market is constantly looking for two-sided trade. It's looking for buyers to step in or sellers to step in. So if we're not getting anybody stepping in at these levels, it'll go back down to find somewhere where they'll step in. That's fair, John. You definitely contribute to this room and the positive energy. So yeah, you can take some credit. Jonathan, good to see you, mate. Oh, that was terrible. That wasn't even Australia. That was something else. Good on ya. Australia. Yeah, we're growing, bro. It's awesome. Thank you, Lewis, for the share on Twitter. Yeah, guys, anything you can do to spread the word about this. If you're on Reddit, if you're on Facebook groups, or you're in a secret chat room on Discord or whatever, spread the word, share the love. I really got to get to 1,000 subscribers so I can start getting paid for this. I was just looking at it this weekend. I've given YouTube over 14,000 hours of view time and got paid nothing because I just haven't hit the magical 1,000 subscriber level. It's so ridiculous. So yeah, thank you for that. Chris, yeah, if I was short the market right here, which I am, I actually shorted it right here. The first thing I'm looking for is to fill the single print here in the G period. So once that fills, does that bring in volume? Do we start to get a pink node here, right? If not, I will monitor for continuation down. So I'll watch what happens as it starts to trade down. Wherever I feel like it's finding support and it's going to rotate back up, that's where I would exit. Otherwise, I'd wait for it to get to the POC. That's where I'd take profits. Also, now as I'm thinking out loud, I'm going to go ahead and move my stop to a tick above break even or below break even. Okay, so we filled that single print. Do we continue to sell off or do we start to put in volume here? Philip, welcome. We're happy to have you. Correct. The POC is down here at looks like either 44 or 43.75. So I went short. I went 2 contracts right here, a tick above the high from yesterday, and then I added to it like right here when it looked like we weren't bringing in any volume. So my average is 39.66.25 right here. Dimesh, we're in it together, brother. We are starting to build some volume here, though, right? Could find some support. But I think we're going to rotate down and at least hit the halfback here at 39.50. That's just my guess. I don't actually know. Well, Philip, I don't know why your like longer term portfolio is getting hit. We're just a few bucks from the all time high. Did you happen to build your portfolio up in here? Otherwise, it should be green, my friend. So now that the pink nodes are at 3960, where'd that question go? Is that the sign that price wants to move up? Yeah, it's the first sign that these higher prices are being accepted. Okay, we have good excess on this I period low. So now I'm going to go ahead and move my stop down a couple bucks just in case we rotate back up. Okay, and I just got stopped out of that short for a $400 gain. Doesn't mean the market won't rotate back down, but just right now it's finding support right here at around 39.59. Yes, sir. Looks like they want to go to that all-time high. They're like, it's so close, though. Let's just go touch it. Let's just go poke at it. Oh, yeah, Philip, I know what you mean. I actually own a bunch of ARK in my long-term portfolio. You got to understand there's going to be pullbacks, right? Like when that those innovation stocks that she's invested in, when those got so crazy overbought during this pandemic and stuff, like they have to come back a little. So if you're a long-term investor, those are probably still great investments to be in. Tesla's not going anywhere. Well, thank you, Lewis. I appreciate it, man. Okay, I'm switching myself from rotational day to just feeling neutral because I'm kind of just getting some uncertainty here. It feels like the market wants to trend higher, but it's failing at it. I'm just looking at the market internals and they remain pretty bearish. So that tells me this might be laggard buyers that are stepping in here and buying. And when they run out, I mean, they may get another push higher, but whenever they run out, you get the quick rotation back down. So I don't have a trade either way right now. I'm just letting the market do its thing. Dinesh, you must be a student of James Dalton, using the term exactness. Look at you. Yeah, I mean, that is what I feel like. I feel like these are laggard buyers. They are bringing in some volume, but the internals, man, it's like you're almost starting to see a trend down in the ticks. Lower highs, lower lows, and the other two remain, bearish. So, yep, they may be running out here, and they'll need to pull back to bring in new buyers. But they're just, like I said, they're just starting to bring in volume, so they're fighting the fight right now. Let's give them a chance to figure it out. Yeah, and Chris, what he means by a weak hands long is he's saying that the people who are buying here at these levels, if the market starts to pull back, they'll just immediately exit their trades. They're not holding for a long term. They're just trying to grab the lows. They're probably watching like the low of that. And so as soon as they start to fail and the trade goes against them, they'll all exit at once, and then the market will liquidate a little bit. That's what weak hands means. That's right, Nathan. We keep things sophisticated here at Pirate Traders. Yep, and this brings back into the conversation the idea that we talked about earlier of time, right? Even though volume is telling us the fairest price to do business today is down here, the more time we spend up here, the more people will want to do business up here. They'll finally believe, they'll trust that the market's going to push higher. So the more time we spend just grinding around these levels, the more volume we'll bring in. It'll change who's doing the buying. It'll bring in new buyers for the next push higher. But we are still currently looking at a look above and fail. So it's too early to say. Jonathan, those red lines just show the single prints in the I period. Just make it easier to see where they are. Chris, so is this testing the weak hands? Yeah, that's what's going on right now, right? The people who bought all up in these areas up here, the more and more the market pulls back, the more and more scared they're getting, right? So some of them are starting to sell. They're starting to be like, oh no, I'm wrong. And they're getting out of their trades. At the moment, right here, where we're seeing the volume, new buyers are stepping in to buy it. They bought it here in the H, they bought it here in the I, but if it passes back through that again, are they going to buy it? If not, these people are going to get more and more scared. So they're going to liquidate more and more and more. The more that it liquidates, the more people that pile on short, and all of a sudden you find yourself back at the POC. But right now, they're just very slowly doing battle. The tempo today is a nightmare. Looking at the candlesticks, doesn't that look like the market wants to roll over? Let's look at the internals. Yeah, the trend down continues in the ticks. The advancers versus decliners and the breadth remain bearish. They're doing battle in this final little spot. Is it going to hold up? You'll know when they start to give up because the tempo will pick up. The market will start falling and lifting really fast. Do, 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 do. That's when they're giving up. People go in limit, they come out market. Okay, yeah, the letters, um, ignore the coloring in the letters except for the green and yellow. The green is where the POC currently is, and the yellow is where it was in that time period. So in the B period, this is where it was. C period, this is where it was. Now it's down here. That's the only color differentiation in the letters that matters. It's just showing you volume within a 30-minute time frame, but I don't look at that at all. I'm looking at the color of the bars over here. That's what's more important. Okay. So again, even the liquidation is happening at a slow tempo. What a weird day. But I expect the market to pull back, find support maybe at the half back, maybe at the moving average here. We didn't make lower lows with the ticks, so maybe it's ready to find balance up in here. If so, we'd pull the POC up later in the day. That's correct, Chris. 2 ticks to repair the weak high. Also worth noting, this is the first weak reference we've had all day, except for the poor high we created for a second in the H period. This is the only weak reference. So that's an indication that it's bigger money players stepping in and not just short-term traders. We're at 48 likes. Do I have 2 likes out there? Can I get 2 of you to get me to 50? We can do this. Let's get to 50 likes today. $53. We did it. Beautiful. Thank you, guys. $58. Okay. Well, now you're just being excessive. Okay. Now you're just being too nice. Cut it out. No, seriously. Thank you. I got 59, 55, 50. Do I have 60? I have 60. Do I have 61? Do I have 61? Don't you do it, Chris. Don't you dare. I will come to your house. Yeah, I have the internals on Thinkorswim, and the software that I look at the market profile on is called Window Trader. Window spelled without a W at the end. And I use the Window Trader Lite. There's 2 versions. I use the cheaper of the 2. Magnesh, Mangesh. um, I keep them on my chart forever. So it's just like as the market continues to work higher, I just leave the old things sitting on there, and not just poor references. I leave every old reference, an old balance area low, random old highs. Here's an old poor low that got left behind, another poor low that got left behind, another poor low. So yeah, I just keep them on my chart forever just in case we ever fall back down into that range. I'll have references. Well, the market tried to liquidate and it didn't get much for it. So it does look like we're going to spend enough time up here to pull the POC by the end of the day up around here. Yeah, Chris, poor highs and poor lows are tricky because statistically they almost always get repaired. As a matter of fact, every poor high always gets repaired, right? Because the market keeps going higher. So like right now, the high in the overnight market was poor, but like eventually it'll get repaired, right? The all-time high that was created in the overnight. But poor lows do sometimes get left behind. It's not that common, but it does happen. It's just one of those times you got to recognize it as a nuance and move on. And as far as how long it takes to repair, again, that's totally random. Sometimes you create a poor low and you repair it 10 minutes later. Sometimes you create a poor low and you repair it 2 weeks later. It really depends. Yeah, John. Unfortunately, I don't think they make their money off of people successfully trading with their money, because even then they only get like 10% of the profits or something like that. I really think they make their money off of making it really, really hard to get approved. And then having people just like keep paying more and more and more to try to get approval. Like, I have a feeling that's what 90% of their business is. That's not to say that there's never a trader who passes the thing and then gets into it and makes money and does great. I'm sure those exist. It's just the more and more I see chat rooms talk about those things, it's like it just seems like a scam to get people to make it like nearly impossible to get in, but then charge you every time you like have a bad day to be able to keep trying or whatever. So you might go back and look at how much money have you given them so far, what's the total number, and then like what if you just took that amount of money and just traded on your own. You know what I mean? Just a thought. Okay, market's finally getting a bit of a pullback here. So do the buyers step in here at the 50 moving average, at the halfback, or do we rotate down to the POC? Yeah, I really don't think we're going to make it to 39.39. I should suspect that the worst the sell off could do is find support down here in this little volume node from today and from overnight, where the POC is. I think that's where you'll find support. Makes sense that they'd be piling on down here. Okay, so Slade, um, I don't know that you're going to get that today, brother. I don't think so. And my reason for that is the tempo and the lack of weak references. Throughout the whole day, there's been no emotion whatsoever in this market. It's just been calm, orderly trade. And there's been very, very few weak references created throughout the day. Every time the price moves somewhere, it does it by moving up and down and up and down in its levels like this. So that's an indication to me that the people who are doing the buying here are more longer term, stronger hands type of traders. They have, because they have so much capital, they can't jump in at perfect highs and lows and stuff like that. They have to kind of leg in. So that's why I think we're not seeing a lot of weak references here. And so that in combination, the tempo and the lack of weak references just makes me think this might be bigger players that are stepping in. We also had, remember, the bounce off the low right here was a powerful signal to people who trade on the longer term, because it was the bounce off the moving average on the daily. Was it the 50 or the 20? I think it was the 20 moving average. It bounced off the daily. So, you know, it just makes me feel like the market is very, rationally working its way back to all-time highs. Value today is higher. So that's 3 days in a row of higher value. Increases the odds the trend will continue. Okay, well, as soon as I say they're not making weak references, the pullback low was weak. Fausto, that's awesome, dude. Keep it up. You'll get one. It's coming. Hi, if you're asking me, yes. When I used to have a regular day job, I would get up, because I live on the West Coast. I'd get up in the morning and I'd trade from 6:30 until 8:30, and then I'd go to work. Plus, I was also kind of swing trading all the time with crypto and stuff. But trading futures, I did just for those 2 hours every morning. Scott, am I retired now? No, I got fired because of the pandemic. I used to work in TV, and they shut us down. And so I just was like, oh, well, now that I'm stuck at home and it's the middle of a pandemic and I can't go nowhere, can't get no job, might as well, take this hobby of mine and turn it into a profession. And so that's what I've been doing over the last year, trying to learn how to do this for a living. And boy, it's tough. But I'm loving it. It's going good, as you guys can see. Most recently I was working as what's called a predator, a producer, writer, editor, making promos. But I've done every job on set. See, Fausto, I don't see it as them suckering people in. I see it as a dip that people are buying. You know what I mean? Doesn't feel like a sucker move at all. It feels like they pushed the market higher. They spent most of the day, once they got to push higher, up in here. They built up volume. They had the pullback and people bought the dip. Feels like perfectly normal market behavior. Scott, how am I doing? A little bit better every day. Thanks for asking, brother. No doubt, Scott. It makes it exponentially harder when you put that pressure on yourself to try to make money doing it. I tell people, if you can learn to trade on the side as a hobby whilst you have a regular job, you're so much better off. Um, but for some people, that drive is what pushes them to success. So to each their own. Philip, thanks for the subscribe, brother. Welcome. Yeah, Fausto, it's tough out there right now, obviously, right? Unemployment's pretty high compared to what it would normally be. And so there's a lot of competition for the job seekers. And the job providers can be a lot more finicky about who they hire. But eventually, the market comes back to its norm and they need people to fill those jobs. So just keep at it. You'll find something. Yeah, hi. The advice that I have for that situation is only use mad money, right? So only use money that you wouldn't mind losing all of it. So, like, let's say, you like to put 20% of your paycheck into savings, right? Maybe you just only put 18% and then you set aside 2% for your trading account or whatever. A lot of people in this room might disagree with me on that, but I just think when you're first starting out and you're learning, before you become profitable, only put money in that you're willing to lose completely. And so if you have to keep your trade small, like only do one MES contract, that's fine. Keep your trades really small. It's better to trade like that than to try to put like, a chunk of your life savings or whatever in and then trade the ES and just hope that over a period of however many months you'll learn to be successful before you'll run out of money. Like, that strategy I don't think works. So just only put in what you can absolutely afford to lose and try to keep your emotions less intense that way. But it is really a personal thing. For some people, the idea of putting their life savings into it is what motivates them to be successful. That's not me, but if it works for them, it works for them. Trading donkey, that's my favorite thing you've ever said. I love it. That's the way to do it, baby. Take a tiny little piece and put it on the crazy ones. So Nathan, you must be one of those people that's on Top Step or whatever. Um, what is you guys' argument for why it's better to trade that way? I'd just love to hear it. What is better about paying to trade with other people's money than just trading with your own money? Yeah, I'm not asking it as a joke. I'm being dead serious. I'm really curious. I was looking into doing that myself, and I just couldn't wrap my mind around why it was better than just building up my own. Like, I get if you don't have 20,000 to trade with or whatever, if you've only got 2,000, but like, why not trade your 2,000 into 20 yourself rather than pay the 2,000 to let somebody else to trade with somebody else's 20, and then if you make a mistake you lose everything. Like, I'd love to hear the counter argument. I see, that makes sense. So it's about taking risk off the table, only risking a very small amount. That makes sense, Rocky. And do you still trade with their money, or have you now taken your profits and you're trading with your own money? That's so interesting to me. Huh. Well, there you go. The only counter argument to that, Slade, is like I feel like if I had started off using that, I would have quit being a trader because I wouldn't have been able to like, oh, we pulled the POC higher. Took us all friggin' day, but we got it up here. So that's bullish. Yeah, it's just like in the beginning, I blew up so many accounts because I had to like make the same mistakes over and over again before they finally like set in. And I wonder if like I had tried to start with Top Step, if I'd have just been like after a certain number of blowups, like just been like, oh well, I guess I can't be a trader. Um, yeah, it's interesting. Very curious. Yeah, you guys are making a great point. It's just to me, if the combine is paper trading and you're paying money to do it, like I don't know, it's just my thought is like why not just make the rules for yourself, paper trade for free, and then just when you're successful then put in your own money. But I get what you guys are saying. It does make sense to limit risk, to give you structure. That all makes sense. Also, just feeling like you're part of a group gives you a little more confidence. Other people have been successful with it, makes you feel like you'll be successful. Rathish, I think that analogy completely confused everybody. I don't think that helped at all. No, but I get what Rocky is saying here. That makes sense to me. Is like the little bit of, even though you're paper trading in the combine, the little bit of money that you risk gives you that pressure of feeling like there's real money at risk. So that's like the little bit of edge over just paper trading. That actually makes sense. All right, guys. Well, start making your plans. We're 10 minutes from the M period here. We've got value much higher. We pulled the POC higher. We got 2 week references below, plus 2 poor lows way below. Okay. We found support in the spike of yesterday. And we got the all time highs just right there. Just like, hey, what's up? We're so close. So start thinking about what you think's going to happen in the next 40 minutes. We're not there yet. All right, Slade's already calling the blow off top. I'll be honest with you, I don't think that's unrealistic. I mean, they want to push this sucker higher. The internals are the only thing working against us, but that's what they seem to want. John. Oh, that's so funny. You didn't think about jumping into that long while we were down here? You had to wait for the for the high? Oh, that's great. I love it. I mean, you might get lucky, dude. I really think the M period might just give us a giant shove higher. All right, guys, we're in the M period. Lady M is upon us. What are we thinking? Where are we going? What's going to happen? Hit me in the chat. There's 75 people here. I want to see at least 74 responses. Let me know. What do you think is going to happen over the next 30 minutes? Where are we going to end up today? $4K? I don't know. Yeah, no, that's quite a blow off. Okay, got a weak M period high here. Okay, 39.58. High seeing a rotation back to the POC. Donkey seeing a small pullback and then a push higher. Salmon River seeing a pullback. I assume back into value here. OSIF also seeing a push higher and then a return back to the POC. Slade, I will let you drama all you want, brother. Drama away. Nathan for the 39.60s. Another rotation back to the POC. Mangesh seeing us push just above the high and then get some short covering rally. 39.75. Amgossel sees us just getting above the old high. O Monk, 39.75. So once again, we're like pretty much split 50-50. Half think rotation to the POC, half think push higher. One thinks crazy push higher. You think this is enough of a pullback? Dun 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 dun. It's so interesting what happened with the breadth and the advancers versus decliners today, though. They were just straight up wrong. Both markets trending higher all day while they're trending down. It's weird. Yeah, Salmon River. It certainly wouldn't be the first time I've seen something like that in the M period, where you just like in one single, 10-minute period, you push way up, you create like tons of excess, and then you just pull all the way back down and like double the move up back down. It's so strange. So I don't never trust the M period. Lady M is tricky. She's a sneaky one. Okay, this high remains weak. Thanks, Jeff. We'll see you next time. And thank you, Salmon River. I do what I can. I do the best I can. You can do it. We need the Rocky music. Dun 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 dun. Do 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 do. It's not working. Do do do. Because the eye of the tiger, it's the friend of the fight, rising up. Do 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 do. It's not working. The market's not listening to the music. Phoenix. Uh-oh. I wonder what's going on there. I don't know that that's enough to affect the market, but man, that's not fun to hear. That's the one my mom took. I do believe Slade. I believe. It's like the Peter Pan movie. I believe, Wendy. Okay, well, now we have a poor high, so we don't want to leave that there. We got to get a little bit higher. Oh no, they're starting to liquidate. Oof, look at the ticks. Ramp, ramp. Okay, so does the market find support here at the POC with this little node of volume just below it? Or do we try to go down and repair these pullback lows? John B, a poor high just means that that one of the levels that's right up against it is only one tick away. So if the M period was one tick below at the same level or one tick above the L period, that would make it weak. And if a weak reference is at either the high or low of the day, it becomes a poor reference. The difference between a weak reference just means the market's likely to come back and repair it, likely to come get 2 ticks below it. But a poor reference is different because it often first pushes away, then comes back to repair it. And they also are higher probability of being prepared or being repaired than just a weak reference. It's just a sign that there wasn't a good end to the two-way auction process. People were trying to jump on shorts too quickly, and so they got into bad positioning. Yeah, Phoenix. I don't know about easy or not, but it would be nice to see a little push down to repair those weak references at the end of the day. That would just give us one less thing to be worried about tomorrow. So I'd sure like that. I don't mind leaving the poor high behind because, again, it's just another target to the upside for tomorrow. Okay, first week reference repaired. Also looks like the VWAP is lining up with the halfback, which is another common pullback target. And probably right about the same time we hit that moving average on the 15-minute candles. So, real quick here before the close in 3 minutes, I just wanted to take a second to just appreciate the fact that today, at one point, we had 88 people watching the stream, which is the most we've ever had. And I just want to take a second to say thank you to you guys. Okay, I know it might seem like I'm the one doing all of this, but really it's those of you that regularly participate, that come back every day and give your input and keep the chat alive. It's really you guys that are making this stream awesome. So I just want to say a huge thank you. You know who you are, the regulars. You know, Phoenix, Slade, John, Steve Z, Newsblip, Donkey, Asif, Rocky, Fausto, like you guys know who you are. And I just want to take a second to say thank you guys so much. You know, I've been working on this for a long time, trying to get some momentum behind it. And as soon as you guys started coming here and being here every day and really keeping the chat alive, it's helped propel the channel forward. So an enormous thank you to you guys. It looks like anybody who called rotation back to the POC, looks like you were right. Deke, you too, man. Yeah, and Brady, we need more from you, Brady. You're not bringing enough to the table. Slade, I have a Discord. I just always forget to check it. I never ever think to myself, go on the Discord. All right. Well, as always, guys, thank you so much. Value was higher today. Let's see if we can keep that trend going tomorrow. I'll see you all then. Thank you very much. I'll just pop in the Discord here in a second. For anybody that wants to join that, I'll pop it in the chat.